So people ask me, what are the key traits that I see in successful businesses? And they asked me that obviously because at this point we looked at probably thousands, if not tens of thousands of potential transactions and acquisitions and hundreds of actual transactions of more than $500 million that we did over the last few years. So today I want to share with you my answer with them. I'm going to go through a few things that we see in big businesses and how they make it work, so you could implement it in your business or in businesses you want to buy or between businesses you want to advise and broker with. So starting with the first one, amazing companies got amazing revenue per employee. Like some companies out there raised so much money, capital, think about it, at zero cost, basically 1-2 years ago. And because of that, a lot of them scaled too fast because they had access to capital and now have around 100,000 revenue per employee. I'm talking yearly revenue per employee, right? You gotta be, if you wanna be a top company, you gotta be at the 300, 400,000 a year revenue per employee. Like the big companies, Google, they have more than $1 million revenue per employee. You gotta get there if you wanna be big. And if your margins are too low, like you gotta make changes. You gotta get there or your model is just not scalable. You need to change your model, you need to change your product, you need to change something in order to be one of those top companies. Like in order to get to that level, you gotta have some economies of scale. The best companies, like I said, Google, the Amazon, the Airbnb, you got 500,000, $1 million plus revenue per employee. Second thing, amazing companies go multi-product. So another super key trait of the best companies is that when the first product is working, they usually go multi-product. So the best businesses, they understand that in order to scale, they need a second product. Usually that second product need to be bigger, more expensive, more profitable than the first. So you basically use to build an audience that love your stuff with the first product. Then you introduce them to another product that is usually better. And it's usually like an ascension product and basically a bigger product, more expensive than the first, or some kind of a complementary product, right? Think about Apple, they started with laptops, then they did the iPods and iPads and phones and the glasses. Those are very complementary products in different prices. Third thing in amazing companies is that amazing companies with amazing products can increase pricing. If you increase pricing, especially for the second product for most companies, like because you can sell it to existing clients, they'll be much happier to pay more than the first product. And founders many times underprice their products. They leave a lot of money on the table because they want to make their customers happy. But fixing pricing is probably, mostly possible with new customers. So with new customers, you can go and basically change pricing versus existing customers. You don't want to increase pricing to them too much. But overall, the higher your pricing, the higher your margin. And like, if you're not sure what to charge, just figure out what others like yours are charging out there, like your competitors, and either charge like them, or let's say if you're 10 times more valuable than them, then yeah, you can charge, let's say 2-3 times at most than them, and then you can position yourself as kind of like the best in the market, right? In the end of the day, if you price yourself similar to others, there's an upside today to that by the fact that you remove friction from the sales process, right? Because especially if it depends on the size of the business, but if you're a small business, you want to get to a point where every deal of yours, like you can close it, like you help your sales team, there's small friction, they're not going to give you like pricing objection because the competitors are cheaper. You got to keep those things in mind. And at the same time, remember that one of the easiest way to increase your bottom line net profit is to increase the overall pricing of the product. And yes, one of your jobs as the CEO, as the founder, as the entrepreneur, is to understand that if you want to scale, your job is to also remove friction as much as possible, especially when it comes to customer acquisition cost as much as possible. But that leads me to the next one, which is the fourth thing, which is great companies got really good sales process and good sales team leaders. So they have great sales leader, usually coming early to the company, so they really understand kind of like everything about the business, about the product, about the flow of the clients and who's the ideal client and how to filter bad clients. And usually they come ideally as early as possible in the business when the product is good enough. And look, I mean, a good sales leader, in the first 90 days, you can see a super lift with pretty much the same leads that you had, but you'll get like sometimes twice the revenues just by having a good sales leader. Because he can come in and at the same time, you don't want anyone who just to come in and just manage, right? You want someone to come in and be willing to take meetings and calls and provide great training and overview and create dashboards for great tracking to the team members, and also be able to hire great team members and maybe even bring in team members from teams that you worked for in the past. So it's a combination of really good with people, really good at selling, but also really good at looking at data. So kind of like both of the world of like an art of like being the emotional salesperson plus the logical part of looking at data and showing the potential customer the data of the benefit of working with you and your product. And yeah, just good sales processes. The best companies, they have that good sales processes, sales team. That can be the difference between 30, 40, 50% more in good companies versus less in the same sector. Let's move to the fifth trait of great companies, which is great companies got about, if you look at the public companies out there, they got about 30% of their revenues globally. Right now, obviously some businesses, it won't work for them to be globally, right? But at scale, if you look at public companies on NASDAQ, a lot of them got around 1/3 of their revenue outside the US. So how do you do that? I mean, a lot of those companies, they find their niche first, they build it, and they see which clients learn about them over time. So they build their brand in the US, and then over time they expand, or they build first in Europe and then they expand to the US, because people will find you. If you have a brand, even if you're just targeting like US, eventually people in other countries will find you if you do a lot of marketing and content and brand building, right? So you find out who are the people that want to buy you internationally, and slowly you can move in there, see the potential in other countries, lean into those that are reaching out to you and scale it there. And obviously start to ask yourself, like, what can you do to localize your product as soon as possible into different languages? And and a lot of people don't want to do that. Like, even for me at this point in most of my businesses, I don't want to deal with changing languages and whatnot, but it's a great cheat code. For us, for example, we did deals and were involved in deals in tons of countries, but we still only focus on English speaking countries. So US, UK, Canada, Australia, mostly US, but we also have networks in the UK, Canada and Australia. But at the same time, we've been involved in deals in Eastern Europe and South America and all over. So, and a lot of those leads and clients came to us from just our organic content, right? While we only target the US market. So it's something to think about. How can you go global? Okay, let's move to the sixth trait of amazing companies. So amazing companies got net revenue retention of above 100%, which means that it's gotta have amazing product. To be an amazing company doing 100 million plus in revenues, you gotta have an amazing product. And that's the hard work, right? I mean, that's the hard part. It's how you make something, like, you gotta get to a point where you build a product that is so essential to someone's life, to like someone need to get to a point where they can't live without you to really have that high net retention revenue on your clients, right? To get to a point where they're actually paying you more every year in total. So yeah, you need to have a path to eventually get there, because at first it's really hard for most companies. At first you'll have a lot of clients churning and leaving you. But yeah, if you're not there yet, you at least gotta have a plan to get there. So how do you do that? You just find ways to add more value for the same dollars, like, and it must be something to think about early on, because eventually if you don't fix it, it will drag your business down. Like, if you churn high percentage every month of your growth, like, you must address it. Otherwise, you just need so much growth to overcome the churn. You'll always need to find new customers in order to make the same amount of revenues if you have a high percentage of clients leaving you every month. So it's probably one of the best things you can do. Imagine if all the clients you ever worked with in your business, from the moment you started your business or bought it, stayed with you and no one left you, and they paid you some monthly or yearly fee. I mean, for most businesses, that will be a life-changing money. And if you think about it sooner than later, all your business path could be very, very different. So that moves me to trait number 7 of amazing companies, They know how to deal and handle dilution, cost of capital, capital stacks, for massive wealth creation, not just for themselves as the owners, but for their shareholders. So what that means, I mean, look, if you want to have a massive exit as the entrepreneur, for massive exits, like it's very rare that companies are not raising capital. So you most likely need to raise some kind of capital. Now, if you raise just few millions, maybe you just get diluted a bit, and that's okay. Or let's say if you raise 500,000 to a million, and you bring in good people, or you buy a great business with this, you do one good acquisition, and you get things kind of like off the ground really well. Because obviously it's really hard to do things on your own, or to start from scratch on your own without capital, or to buy a business without any capital that you use from other people's money. Then if you just got diluted a little bit, like let's say deals that we were doing with some of our members, I mean, they're raising equity and get diluted by 90%. So they still own like basically 80% or more of the business, but they don't bring any of their capital. So the investors are bringing, let's say, all of the equity, but take 90% of the deal, let's say. So to get they diluted, I mean, it's a fair deal. It's a pretty good deal. So, I mean, you own 80% or so, 81% of the company or so. You raise money once, you grow the business for a bit, and then you exit. But that's for, let's say you want to have a small exit, right? Let's say you want to have a 5 up to 10 million exit soon, then that's okay. But if you raise usually more than 10 million, I mean, especially if you work with VCs, venture capital firms, you sign for like 1 billion plus exit, or anything below that is disappointed. Is a disappointment with the investors, basically, right? Plus, you also get to a point where you probably have too much money to deal with that you gotta spend. Otherwise, your investors are not happy because they want to see you invest money. Otherwise, I mean, why they give you the money? They can invest it in the stock market. So yeah, a lot of entrepreneurs are getting addicted to burn money more than they need. So yeah, if you don't feel it in your bones to grow like a massive company and you want to get to the billions, then don't raise more than like 500,000 to a million to do your first deal or start your first company. Because above 10 million, I mean, people and investors will start to expect a lot. Don't get me wrong, it happens in the smaller businesses, but it's not the same. Because yeah, I mean, when you take money from investors in general, like you need to get to a point where you'll do whatever it takes to get them the return back. It should be your life mission if you're doing that. It's like having a kid, you know. So you better get a return for them, because imagine if someone took your money, like you really wish and hope that they will do a good job and do whatever it takes to give you return, right? So it's kind of like you want to do the same for them. So yeah, just in general, before you raise too much money, think about it as well. Like, what are your goals? Do you really want to get to the billions, or do you just want like a small up to 10 million exit? Then you probably don't need to raise a lot of money. So yeah, hopefully you guys like it. Let me know in the comments which trade, if you're still here, let me know which trade you think is the most important and which one you like the best. I love you. Bye bye.